Hello everyone, this is the pre-market report video for today 5th December 2023 for the Indian stock market in terms of Nifty and Bank Nifty. I don't want to talk too much about yesterday's Indian market action, but I like to highlight some of the important stats. Yesterday, it's not just Nifty, Bank Nifty and Sensex reached the all-time high value. It's also 11 out of 13 major sector index all reached the all-time high peak value. And very important point, on earnings wise, would you all believe if I say that Nifty is now cheaper compared to when it attains the peak value in the last two times, July and September? But it is. Please note, I'm not saying Nifty will go up further. It may be or may not be, but in comparison, it is cheaper. Let's look those in detail. First, on July 2023, Nifty almost reached 20,000 but haven't cracked the 20,000 mark. At that time, the earnings per share of Nifty was just 823, equating that for the 19,980 Nifty price, which gives the PE ratio of slightly above 24. Then in September 2023, Nifty reached the 20,222 and closed around there. Here at that time the earnings was 885, equating that we will get the PE ratio of 22.8. Now yesterday Nifty reached at another all-time high value near 20,700. However, now because of all these good September quarter results were released, Nifty's earnings increased massively to 935, which equates to the PE ratio of just 22.1. So 22.1 PE ratio compared to 22.8 and 24, this clearly shows Nifty is cheaper on earnings perspective. So this yesterday's rally was not just because of the election results, rather this election results just unlocked the Nifty's potential, again which was stagnated due to the uncertainty around the 2024 elections. That's now to some extent it's cleared. Now the most important question is what next? At present for Nifty, market is betting on the annual earnings increase of 15% and continuation of present ruling stable government. If that didn't happen in the next December quarter results, then it will have some pressure. So based on above all previous informations which we discussed today, if there is no negative news from US like increased inflation, interest rate hike, etc., or no negative news from local like Adani Hindenburg issue, then the most probable scenario, Nifty might increase all the way up to 21,200 to 21,400, where it will face some resistance purely based on PE ratio in the short term. I hope it is giving some new perspective. Moving on, about institution activities, yesterday both FII and DI's trade volume increased almost double than that of the regular trade volume. Then for the 8th consecutive session, FII was net buyers. They bought for around 2,070 crore rupees, and in case of DII, they net bought for crazy 4,800 crore rupees. So as a total, as an institution, together net bought for 6,870 crore, or we can say near 7,000 crore rupees. Here one more thing, yesterday it's just Indian market was positive, all others China and Japan both closed negative. In case of Europe, they closed flat to negative. Even last night US market closed negative, which we will discuss in detail in a moment, but still during the US market time and today early morning, GIFT Nifty traded furthermore positive and closed at 20,870. Equating that to the spot market 100 to 130 points premium, indicating a gap up opening of 30 to 70 points. Let's see. Now coming to US, we know in the last pre-market video we discussed in detail, at present US market started to factor and considering an interest rate cut as early as March itself. However, last night lot of economists raised their concern and gave their opinion that unless there is a big slump in the economy, there is no way Fed will cut the interest rate as early as March, even if the inflation falls below 2%. Since they believe that Fed will keep the interest rate as long as economy is doing good and consistently inflation comes below the 2% target. Just for info, year to date S&P 500 earnings increased just over 6%, whereas S&P 500 index increased almost 20%. In comparison, Nifty earnings increased 13% and Nifty index also increased around 13%. Then in case of Nasdaq, it's even worse. Year to date, it increased over 37%. So all created some profit booking in US last night. Dow Jones decreased marginally by 0.11%, S&P 500 down by 0.54% and Nasdaq too down by 0.84%. In case of VIX, increased over 3.5% and moved from around 12.5 to above 13. Then coming about oil, as we discussed enough in the last two pre-market videos, so I don't want to bore with the same info, which puts more pressure and pushed the oil further down around 1%. At the time of this video, Brent crude dropped to 78 US dollars per barrel and WTI crude dropped near 73 US dollars per barrel. Regarding Indian ADR, please pause and have a look at the table. It shows how much it changed last night and how different it is from the Indian spot market price. Anyway, as we see last night, both the banks closed significantly further more positive than Indian market, especially ICICI Bank in US ADR, it increased near 6%. However, in comparison, even on Indian market, it increased only 4.5%. Please note this 6% increase on top of the 3.5% increase on the last Friday. So clearly this ADR showing that banks still got some more positivity in it, at least 1 to 2%. However, both IT stocks closed negative. Even yesterday in Indian market, Nifty IT increased only 0.2% despite the mega rally on the other sectors. Hence, in short, for banks it's positive, but for IT more of mixed to negative. Those were the things happened yesterday in the global market. Here, I like to highlight couple of more things. First, yesterday in the after Indian market close, ICRA rating released the report that they expect Indian IT sector to grow slowly in the next 3 upcoming quarters. They cited demand related worries as a reason. And also in the next financial year, they expect it to grow only by 6%, which will be very less for IT stocks and doesn't justify its high PE ratio premium. So this might be the reason why Indian IT ADRs were down. Second, yesterday Reliance officials said that once they completed the 5G rollout by December, then they expect the company's debt to reduce. I'm not sure how market will react to it, but when Reliance released their earnings, at that time we did discuss about its high debt. So if they reduced it means then it's a huge positive. As a summary, Nasdaq closed significantly negative. Same for Indian IT ADR as well. And also at present, US future market is trading in marginal negative. Those are the concerns. But on the positive side, GIFT Nifty indicating a gap up of 30 to 70 points and banks still looks further positive. So we can expect some more support. Let's see. Moving on, as per stock open interest, Ashok Leyland, MCX, ZTV, DFC Life, Glenmark Pharma, Abbott India and Granules India got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Power Grid, Ramco Cements, ONGC, India Cements, Federal Banks and Oberoi Realty got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, early morning Tokyo's consumer inflation data, China's service and composite PMI data are due to release. Then during our market time at 10:30 am, India's service PMI data and at 2:30 pm Eurozone service PMI data. And in the aftermarket hours, Europe's wholesale PPI data. For US, their service PMI data are scheduled to release. And very important, number of available job openings was in October month. These are the some of the items we need to keep an eye out today. Please note, last time for September month, this jobs opening data came as above 9.5 million, which in turn made the US market significantly negative. Coming to technical, yesterday Nifty opened with a huge gap up by more than 300 points. Then it had some consolidation during the first half and in the second half it added another 100 points on top of it. Finally, it closed above 400 points positive on one single day. Thus, on the daily chart, it formed a bullish candlestick pattern with a long lower shadow, indicating buying interest at lower levels. Then, for the fifth consecutive session, it made an higher high and higher low formation, all indicating that there is some more steam left in the rally. As a overall, with a robust ongoing momentum, in the short term, Nifty is likely to surpass the 21,000 mark, and if it sustains above, then we can't rule out the possibility that this will further increase to 21,500, while now the immediate support is shifted higher to 20,500 and then strong support at 20,000 level. In case of Bank Nifty, it's a star performer. It opened 850 points gap up and up by over 1,600 points, over double the gap up opening. Thus, on the daily chart, it formed a strong bullish candlestick pattern, continuing higher high and higher low formation for the 6th straight session. So now the momentum is expected to continue, and the ongoing momentum rally has the potential to propel Bank Nifty higher towards 47,000 or even 48,000 with a robust support around 46,000 to 45,800 zone. Then on the weekly options front, the maximum call option open interest was at 21,000 strike, followed by 20,700 and 21,500 with meaningful new call option writing at 21,500 strike and then at 20,700. Thus, the weekly options data indicating 21,000 can be the next resistance. Whereas on the put side, the maximum put option open interest was at 20,000 strike, followed by 20,500 with a new put option writing at 20,500 strike and then 20,600, all showing the immediate support at 20,500 mark. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.